Now, there's another thing in the financial space, O'Shares, and I was talking to people before who actually own the OUSA. Is that the
OUSA is one?
Yeah. And this guy's own it, and I think you guys, fundamental story of why he started this, about your mom and stuff.
Yeah.
I think you should share that.
So, when after my mom passed away like a decade ago, I got a phone call from the executor. I'm the older brother. My younger brother was 2 years younger than me. And they said, look, you got to come down here as the elder, and you got to see this. She kept a secret account from her both of her husbands her whole life. And it had a fortune in it. And it was basically 50% dividend-paying stocks, 21 of them, big ones, and a whole bunch of telco bonds. She kind of had this thing about phones that no one would cut their bill off because they wouldn't have any communications. So she bought the bonds of phone companies. She'd had this portfolio for almost 50 years. It outperformed everybody. And I went back and did some research, and this just blew me away. In the stock market, and this is true for the last 100 years, 70% of the returns came from dividends, not capital appreciation. And there's always these great stocks that don't pay dividends, and they're cool. I'm not saying you shouldn't buy them. But if you look back over generations, all the returns came from the cash given back to you as a shareholder in profitable companies. And so, if you think about that, you buy a stock that doesn't pay a dividend, the only way you can make money is it has to go up. And sometimes stocks don't go up. Sometimes they go sideways, and sometimes they go down. But a profitable company is paying you every 90 days, and that ends up being a really big deal. So I thought to myself, there's thousands and thousands of companies, and this is where the whole O'Shares idea came up. Let me give you an example. January, the tax laws change, okay? And if you could just find the companies in America that have all of their sales domestically, all right, so they're not going to be subject to trade wars, that are profitable, because if you're not profitable, you don't pay tax, so nobody cares. So you got to be profitable. And at the same time, you're not a REIT. REITs don't pay tax, okay? Now, I've just given you a whole bunch of rules there. Think of the FTSE Russell 2000. It's probably the most famous index in the world. It's managed by FTSE Russell, a Seattle company combined with one in New York. They do the research and they add 2,000 companies to it every year. So I went to those guys. One of the great things about being a shark is everybody returns your calls. Look, it's wonderful. I said to them, would you build a new index? I'm going to give you the rules. Take your own Russell 2000, strip out all the REITs. I don't want to own any REITs because when rates are going up, you don't want to own REITs. They don't perform well. I only want to own the profitable companies, the ones making money. I don't care what sector they're in. So my rules are no REITs, you got to be making money, and I added some other ones. I like high return on assets, so companies that are growing their free cash flow, I like that. If you apply those rules, only 224 companies out of the 2,000 qualify. But think about it, they used to pay 30% tax, and now they're only going to pay 21% tax because all their revenues are in the US. That's OUSM. That's an index that they built that is full of all those companies. Pays a dividend every quarter, you own 224 companies at once, and over the next 2 years, my theory is that they're going to have big upside surprises because they don't even know the impact of the tax laws on them yet, except they're going to have more cash flow. So that's an index built by FTSE Russell that I licensed back for them. They got 100 guys doing the work every quarter, looking at every company, deciding which ones are in it, which ones are out. I don't care. Just give me the profitable ones. That's all I care about.
No, I mean, it's like, it makes so much sense. Like, we're all looking at Facebook and stuff, but like these different stocks, but then you look at a portfolio and you get a dividend every quarter. Like, I wish I had more of these.
I love the cash. It makes me feel warm and fuzzy.